morning, traders. I'm Dennis Dick.
And I'm Joel L. Connon. Welcome to Premarket Info.
Well, on today's show, we're going to take a technical look at the S&P and its top components. The government selling a big chunk of their stake in AIG. That's knocking AIG price down a little bit here this morning. You had a big miss from Titan. And can these banks keep on rallying? They've been on a rally. Can they keep it up? Joel, how was your weekend?
Are you ready for some football? I had a great weekend. Went to a Michigan game, watched a lot of football, went to bed early last night, and ready for a good show today.
Yeah, and the Lions won too. It was a squeaker there at the end, but they pulled it out, so good for the D-Town. Before we start the show, though, we got to settle a bet here. On Friday's show, ADNC, you were telling me, and we made a little wager there, that you took $9 when it was at $8. You took 9. I took 7. I thought I was going to see 7 before 9. And look where it turned out. Opened at 7.17 and went straight down through that $7. So pay up.
Oh, okay, Mortimer Duke. You kind of remind me of Mortimer. So actually, we've got some requests from our listeners to actually start keeping track of our little bit wagers here. So we'll start wagering $1, just like Duke and Duke did in Trading Places. And though I don't look like Randolph Duke, you do look like Mortimer Duke.
Oh,
so
thanks for the compliments.
I owe you $1.
Thanks for the compliments. Let's get over on to this market talk here. We have been consolidating here for all day Friday and this morning. Quiet after that huge run-up that we had on the Thursday. But if you look at the chart, we had that huge run-up. Now just this quiet consolidation for the better part of all day Friday, overnight, and into this morning.
Yeah, a lot of times when you have an expanded range day like you did on Thursday, you really look for some immediate follow-through one way or another the following day. And if you take out the Globex range, you had basically a 6-point range on the day. Very unusual. I just got a lot of people stuck short in the market, so it's really not going down. And still continue to see large institutional offers and sellers on the way up. Perhaps people taking profits after this major run. But be interesting to see whether or not we can crack Friday's low first at 14.30 or march up, take out that high we had from Thursday, 14.38.75, because I don't have any resistance in here. I honestly, as hard as I worked, I cannot find good resistance really up until almost that 14.50 level.
You've got a real battle again here between the bulls and the bears. You've had this big run up here. I do believe you've still got some bears that are short, just like that piece that I put out over the weekend where I think you've got some fundamental traders that are short here. I think you've got technical traders that might still be short here, and possibly even some opening only order traders from Thursday. So you've got a lot of participants. Hopefully those guys are out, but you definitely have some participants that are short this market still. So every time it goes to pull back a little bit, I think it's finding buyers from people covering their shorts, where if it starts to go, and then obviously you've got investors here that are taking this nice opportunity to lighten up. So it's a battle between the bulls and the bears, but I do believe once you get everybody that's lightened up, that wants to lighten up, if we can stay above this 14.30 and start to drift higher and start to eventually get up to 14.40, we have room to run to the upside. I still think the path of least resistance is higher here.
Well, you were right all last week about it. Until the market gives us some indication, perhaps taking out this 14.30 level, we'll have to continue with that motif. Moving on to some of the Big Ten here. Apple Computer making new all-time highs in the pre-market. Monster run here. The highest we've traded in the pre-market is 681.84. The low in the pre-market has been down at 680.40, so basically a 2-point range. We'll keep an eye on the close, 680.44. That's really the only number you have on the downside, and going up on the upside. All those pundits have been calling for 700. Will it happen this week?
As it starts to approach it, you got to think it's kind of like a magnet. We do have that new iPhone release. I think it's scheduled for Wednesday. So you could have a run up here in the day or two ahead of that. So it is up here in the pre-market. The market's down 3, Apple up $1, so its relative strength looks okay. okay. Looks like it could possibly break out. So all depends, I guess, on who's positioned in which way. But sometimes you do see a run up in the day or two before these, so just be aware of that. And as we approach that key $700 level.
Looking at Exxon Mobil on Thursday, it finally cracked all those sellers at
Yep.
89. Got through there. Really was nothing in the 89 handle. Got up to 90 on Friday. I'm not sure if we still have some pesky sellers
we
at
do.
that level. Only settled 8 cents off the high of the day here, but really the next level I have above this $90 level was the June of 2008 high of 90.50.
90 is big on this stock, and I do actually have a trading position in on an ExxonMobil, so I will limit my comments, but I'll just say that 90 is big.
Okay, moving on to IBM. Broke out of its doldrums as well with the rest of the market. Settled right on the high. It looks like the specialist had some big market on close buy orders, swept them up,
Right.
took them down at 199.50. Whoever took the heat on the close there selling is being rewarded this morning as we've traded down to 199.14 in the market. Really not a lot of support here until 198.08. That was Friday's low, but boy, unless this market really turns around, it doesn't look like we're going to see that today.
Yeah, you had a lot of buy imbalances on the close on Friday, so a lot of the stocks, especially in your S&P 500, actually ran up in the last 15 minutes. So you do have a lot of those stocks that close strong, and that might be why we're pulling back a little bit here this morning, because those run-ups are just on order imbalances, not really any fundamental reason for that. It's just the fact that you had a lot of institutions wanting to buy into the close, and that's what happened. And that's why you've seen a lot of stocks close near or at their highs.
What a frustrating stock in Microsoft. It finally clears that $31 level, had a nice day on Thursday, got up to 31.36. And then I think it was the Intel news.
Yeah,
that's
definitely.
really when it started to get hit, the Intel news. So going back, minor support at 30.73 and major support at 30.46.
Yeah, definitely the Intel news there knocking down Microsoft. It knocked down some of the techs there. Obviously, Intel reducing guidance there on Friday, and it got beat up. So Microsoft is down in sympathy with that. But it did find a bottom, that 30.75 area, started to drift back up. So keep an eye on that 31. That's still a bogey there because that was such big resistance before. I don't know if it'll become resistance again or if it'll go through there, but I'd use that as a swing number.
Okay, GE migrating toward its February of 2011 high. Here's another stock that closed right on its high of the day, 21.59. So when you get the high and the close at the exact same number, I think that adds significance to it.
Yeah, definitely the same type of thing here we were saying where you get that we had those large buy imbalances. GE closed very strong, closing at its high there. It's still finding sellers though. I see some in the 2170 area. You know there'll be some at 22. It's like, okay, so it's broken out, but there's just institutions that have been sitting orders out here basically for years because when's the last time GE was this high?
February 2011 is when we got up to 2165.
2165. But if you go out further than that, that was the high then. Then you got to go back into the 2008 levels, correct?
Yep, exactly. After that that high, I mean, you have to go back into that. Could be a lot of air in this thing.
If it started to get through the 22 area, yeah, I think you're going to see, and it could start to open up a bit, but this is a thick stock. This thing doesn't just turn around and start rallying dollars in a day. It's a slow climb. If it has a good day, it's usually up 30 cents.
I bet you if you didn't have pennies and sub pennies and sub pennies, it would.
It just thickens everything up. The whole market structure on issues like this just thicken up because you have so many traders, high frequency ones, rebate trading stocks like this even, or just coming in basically, and it just thickens up the market. So on the big caps, it actually makes them thinner on the little ones, but on the big ones, it does thicken it up.
If you could find resistance in Chevron Corporation, you're a better technician than me. Got up to 114, closed right on smack dab on the high of the day, like some other issues. 114.05 though has kept a cap in the pre-market, so at 114, of course you can always play it from the long side, but if it doesn't hold that level, I don't think I'd be holding on it below 113.80.
And I do see other institutional sellers at 114 a quarter, 114.50, 114.75. So it looks like somebody's trying to get out a piece on the quarters all the way up. And then 115. I mean, it seems like every whole number we get to in Chevron has more institutional selling pressure. So it's hard to see. You can't see technical resistance, but you can see order flow resistance. So use those whole numbers. If we got up that 115, like they're not huge at the quarters, but there is a little bit there. So those could be minor stopping points. But when you get up there into the main whole numbers, they seem to find sellers.
Okay, anybody looking to take profits or short AT&T, you do have a reference point. Thursday's high was 37.54. Couldn't quite get there on Friday, even though the market rallied. 37.46 was the high. So let's just call that 37.50 major resistance. Above that level, things open up to 37.80. Was looking at the numbers on this. This thing snuck under 37 on Friday. That must have been pretty quick.
I'll go check that out. Yeah, actually, right off the bat, right off the opening, it opened up and then went straight down there. Found some buyers down 36.93, but then popped right back up. So you get a move like down 40 cents on AT&T on no news or relatively little news. Usually those moves, if you fade them, sometimes work themselves out, and that's what it did. I think you had a lot of defensive stocks actually on Friday. It was a whole still risk on, risk off thing happening. I know Verizon was weaker earlier, and even I think you had Coca-Cola, which was weak too. So a few of your defensive names. Oh, and another one was Walmart too. Walmart had a really bad day on Friday. It was just drifting down all day. I was looking at that. So you had a little bit of risk on, risk off, and again here as the market is starting to break out, they start to sell those defensive assets and start to buy a few of the more risky ones.
Okay, J&J was not able to get back up to Thursday's high with 68.22. You're backed up by a big number there, the August 25th high of 68 and a quarter. Kind of had like a double close there. 67.88 was a close. Thursday's close 67.83, and you got a double bottom here at 67.52 to 59. So if you were trading the ranges in J&J on Friday, you probably had a pretty good day.
Again, keep in mind this whole risk on, risk off thing we just talked about. So J&J is definitely one of your defensive names, and if the market starts to rally, sometimes these defensive names, believe it or not, can actually sell off. So keep that in mind if you're trading J&J, is that there's a little bit of sector rotation happening here.
Okay, Wells Fargo could not continue its march into 35s on Friday. I got up to 35.19 for a new high of the move, but then pulled back, closed at 35 even. Treading right here on Friday's low here, 34.74. Really not much under that. I guess Goldman Sachs is picking on Wells Fargo.
Yeah, they're
today.
picking on them a little bit here, removing Wells Fargo from their conviction buy list. That's why Wells is trading down 20 cents here in the pre-market. This level here, 34.75, is where it was finding some support. It starts to take that out. It does get into that vacuum area where we had this huge run up from 34 to 34.75. So needs to hold this whole 34.70 area, or you could start finding some air.
Okay, and the last of the Big Ten, Pfizer Corporation could not get back up to that 52 and multi-year high at 24.49. Got a nice double top here, 24.36 to 38. The close at 24 or 24. Tight range in that yesterday, but looks like the sellers are really getting stacked up from 24.40 to 24.50.
Littered with institutional sellers all the way from that basically the settlement at 24.24 all the way up. I see institutional orders everywhere in the book there, so it's going to be thick all the way up to 24.50. So path of least resistance actually maybe down on Pfizer, which it is trading down here in the pre-market too. So maybe some of your pre-market traders are reading that book order flow too. 24.12 is where it's trading, so it's down 12 cents here. We had this whole channel going on for the better part of a month. We have broke up above that channel, but it's just so thick here. Really, for me to get bullish, I want to see this thing start getting above that 24.50.
Okay, that's a wrap up of the Big Ten.
Do have other stocks here in the news. Let's get to some of the news stocks. AIG government selling its $18 billion worth of AIG in a public offering here. That's what they just announced over the weekend. Stock is trading down on that whenever you get these secondaries or public offerings because they're usually set below where the price is currently trading. That drives the price down. I haven't heard what the price is set at yet, but that price can often act like a magnet. It's probably going to be set lower though. So 33.40 is where it's trading right now, down 60 cents.
Is this the way the government is got out of the is position in AIG on other occasions? This seems that through a public offering. I mean, a lot of times they're private placements. Is this a little bit different, or did I make that up?
No, they dumped a little bit there last year. I can't remember the date yet, or we could point it out on the chart. But this is the big chunk here. 18 billion is a big chunk of stock. So and they do them in different ways. But here's a public offering. So basically, they offer their shares out to the public at a discount to where the price is currently trading, and that's why it knocks the price down too, because there's going to be a lot of stock available at a discounted price.
Okay, you had a low in the pre-market of $33. You got to bounce off of that, so you can use that. A lot of consolidation here, right around 34.40, 34.50. So perhaps we'll take a stab at where that secondary offering is going to be at. It could be at that level. That high on August 13th with 33.23 and the low on the 14th with 33.39. So working into that gap area, we're definitely going to fill that gap today.
Titan Machinery, TITN, announced earnings here this morning, 25 cents against estimates of 43, so pretty good miss. They lowered guidance to $2.10 to 2.30 is what they're estimating that they're going to make. They were supposed to make 2.55 to 2.75, so pretty big lower here too. Stock's down 14% in the pre-market. Was down a little bit lower earlier on, but it is making a new 52-week low here.
Yeah, 2030 is what it hit in the pre-market. After it did that, it got an immediate bounce to the 2230 level, just kind of settling in between those two levels. Since making that low, 21 bucks has been the low, so I'd have to keep an eye on that. That 2030 was just probably a straight print if someone took it home long and just bit the bullet there. But this stock is definitely taking a hit in the pre-market. Look for resistance at that 2250 level. Looking on the longer-term charts, you had a low at 2029 in December of 2011.
Yeah.
So
and 2038 the next day.
Yeah, so that dude's just sitting out there with his buy order, man. He wants it bad.
He picked up a little bit more. It took him a year and a half, but he got a little bit more there maybe at the 2030. But that's why we say, look back. When you see stocks breaking down 3-4 points, look back to your yearly charts. Look where they bottomed before, because even a lot of times in the pre-market, they will find a bottom where they've found a bottom previously, and they did. They found this double bottom here back in December of 2011, and that's where it bottomed here this morning. So it's kind of jumps out at me on the chart when you get those two bottoms right beside each other, and then obviously it comes down and went to that price. So sometimes those old lows and old highs do hold water. A lot of these banks, I want to talk about some of these banks because these things have been on a heck of a run. Goldman Sachs has just been on a monster run ever since we mentioned it a few days ago and saying, look, it looks like it's consolidating nicely and looking to break out. We got this one right on. We'll give ourselves some props on this because, man, this thing has been on a monster run here. 10 straight bucks for 3 days.
Yeah, just going back, I mean, it's, after the fact, and we try and reiterate the same things in the show, but look at this trading activity going back in May here. You had this whole vacuum area basically from 110 down to $100. I mean, it just went sliced through there in just a couple days, and then it really stalled right at that level, and then, boom, once it busted through, well, actually the midpoint it stumbled here at 105, but once it got back through that area, it just popped up. Now we're running into 115.30. We did take that out on Friday, but 115.30 was a high back in April of this year. So I'd keep an eye on that 115 if you're trying to protect some profits. Perhaps a sell stop at that level would be prudent, but boy, there's just not a lot in this stock until you get closer to that 120 level.
Yeah, and Morgan Stanley, a similar chart, just been running straight up here for 3 or 4 sessions. It was at $15 at the beginning of last week. The thing is at 17 now, so quietly, I haven't heard very many people talking about these banks, but man, this has been your best performer last week. These things have been on a tear here. Even Citigroup, look at Citigroup, Joel. It's been straight up here for $2.
Yeah, it broke out through that $30 level. We had several days of
Yeah.
consolidation. Cool. When you look at the charts in the S&Ps, and I mean, this is not one of the top components, but you got the same consolidation pattern as you had in the S&Ps, and then lo and behold, on Thursday that broke out above 30, and it hasn't looked back. Use 32.45 as really the only number you have in this area. That was the high from Friday, and that coincides with some highs that you had in the stock back in the beginning of May. You had a 32.55 high.
Even JP Morgan just quietly been breaking out here again. It's almost like it's gotten a little vacuum area from when the whale trade started. You had that whole gap down from 40 to 38 that day, and we went straight down to that double low where I wanted to buy it, and Joel talked me out of it at 31.
Oh my
I'm
God,
never going to
still
let you live that
talking.
one down. But anyway, so now
You
it's
could have
back.
bought it 31, 32, 33, 34, 35.
Yeah, you're like, oh, hold on, you're gonna get this thing under 30, and I was like, ah, maybe you're right. I'll hold on for a little bit more. I wanted to throw it in my investment account because I didn't think J.P. Morgan was going out of business from that whale trade. Apparently, they weren't because the stock's got almost all of the losses back here now, approaching that $40 area. There's pretty much air up here till 40.
Yeah, well, the gap down, the whole whale debacle started at 40.54. That was the low of the day. It gapped down to 37.99. So those investors that were patient and bought it on the breakdown here, looking to fill the gap. But yep, you got me on that one, Mortimer.
All right. So, anyways, what do you think the market's going to do today? I've already kind of said that I think the path of least resistance is higher. We're very much in a consolidation period here right now for the whole Friday and this morning. Just the market's flatlining here, but so often you see the market makes a move. Fine, takes a breath, but then often you see a continuation of that same move too. So even from a technical basis, I just kind of think that as long as we stay above this 1430 here, eventually we're going to start to go higher again.
Okay, I mean, if you absolutely insist on shorting this market, you have a few reference points here. You have 1437 and a quarter, which was a Globex high. We dropped immediately dollar from the close on Friday. So 37 and a quarter to 38.75. At this point, you can call it a double top. If you are trading this market from the short side, it gets up and through those levels. You have to throw in the towel. What I think is going to be more interesting is when you come down and test. You had a difference between the intraday low and the Globex low. Friday's intraday low was 32 and a quarter, and the Globex low was 1430. So you break down below this 1430 area. There's a lot of air, at least for 5 points down to that previous 52-week and multi-year high at 1424.75.
Well, that's our show for today, folks. Have a good trading day, and we will be back with you guys tomorrow.